Hi everyone, my name is Rishad. Today is the 18th of February 2024 and I'm going to be going over my weekly prediction for SPY. As usual, we'll go over the monthly, weekly, and finally the daily charts, and then I'll switch over to the Excel sheet where we'll review last week's prediction and then obviously cover the option chain for this one and finalize the prediction. So, monthly charts. Immediately we can see that the past 3 months and the current month up till now has been extremely bullish. So this is it's a very long bullish run for SPY and SPX's underlying, which actually did break its all-time high as well. We can see the volume has been steadily rising little by little for the past 3 months, and this month hasn't closed yet, so we can't predict on the volume, but for the past 3 months the volume has definitely been rising, which is a good thing. Then we have the RSI, which is going upwards along with its average. Again, strong sign and confirmation that the market is going upwards from the RSI as well. Stochastic, I know you can't see it, but this is the stochastic where the blue line is the percent K and the orange line is the percent D. So here you can see immediately from the monthly charts that we are in a little bit of a congestion phase. But if we zoom in, we can see that the percent K did actually cross the percent D from below, which is obviously a good sign. However, we are in a congestion zone and there has to be a more clear breakout before we can act on it just based off of this. And that's all we can get from the monthly charts. So let's now head over to the weekly charts and see this price action in a little bit more detail. So last week, 2 weeks ago, up till 2 weeks ago, we had a strong green candle, but then last week, the week starting on the 12th of February, we have right now a spinning top type candle or doji type candle, but I wouldn't say doji because the real body is definitely visible, so we could classify it as a spinning top. We can see that the RSI is starting to come down, although its average is still going up. Stochastic, again, the percent K has crossed the percent D from above, going downwards, which is obviously a bearish signal. Volume we can see is pretty stagnant. It's not especially high, not especially low. But so we don't have any confirmation as to which direction the market is going from the weekly charts. So what do we do? In my opinion, we have to keep the same support and resistance as we did last time. And if we go into the daily charts now, let's see if we can justify this with price action in the daily charts. So here we can see that starting on the 12th, we had a doji candle, then we had a downwards gap which has been filled throughout the week. However, the volume was highest on the 13th, but then it steadily declined for the next 2 days, and then on the final day the volume was higher. We can see that the RSI is actually going downwards, which is not reflective of this price movement, and we can see a divergence here. Clearly, we've made a lower high, whereas here the price action is still currently going up, and we've made higher lows and higher highs. So we see a bearish divergence here from the RSI, which is obviously a negative signal, and stochastics as well. The percent K did cross the percent D from above going downwards, which is another negative signal we have from here. So the daily charts give us a lot of negative signals. So let's head over to the Excel sheet and see if we can get a little bit more clarity. But all we've learned from this is that we still need to keep the support and resistance the same in order to ensure that we're safe in either direction. So last week we didn't have a trade since the market couldn't break the resistance or support, which shows that we're in an indecision phase. So until one of these support and resistances are broken, for my predictions, I will refrain from taking a trade. So this week, again, no trade yet. We wait for the breakout. We buy when it crosses the resistance at 504, sell when it falls below the support at 490.23 with the target of 1%, trailing stop loss. If the target or stop loss isn't hit and we are in a position, then we close on Friday. And the max OI for the weekly expiry is 502 for CE at 69,758 and 490 for PE at 26,520. The weekly PCR is 1.91. The max OI for the monthly expiry is 494 for CE at 54,337 and 450 for PE at 105,805, with the monthly PCR at 3.30. Again, highly overbought, which can result in a sell-off and eventually cause the market to come down. But as for now, the weekly and monthly trend are both up. And that concludes my video for the SPY's weekly prediction. As usual, if there are any relevant changes, they will be covered on this channel. But for the most part, this is all there is to it. And until then, thank you for watching, enjoy, and I will see you in the next video.